Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to look at the USE minis and how they unfolded yesterday, which was the 16th of February, Tuesday. In particular, I'd like to look at this DP buy here that actually nailed the low of the day on the ES. First of all, for our standard traders, our STF was actually blue stroke black here, therefore it would be a trade that you would be able to take. Large degree trend, we always look to the higher time frame to look what the large degree trend is doing on the higher time frame chart. So for this, we use a time frame between 3 and 5 time frames higher. So for this, let's go out to the 5-minute chart because our trade setup is on the 3-minute chart. Oh, there's my analysis I had on from yesterday as well. I'll just clear that off. So what was the position as the market was going down into this low here? Well, if I right mouse click, do Elliott wave intermediate, you can see it was actually finding a wave 4 with the low pretty much at the wave 4 WPT, which is the wave price target, which is the area where we're anticipating a low to come in. If we look at the higher time frame, you can see there's a decline down here, a 5-wave sequence, and we know from this if the market goes beyond the DP from the prior wave 4, it's likely to go to the DP from the start of the sequence. In other words, it retraces the whole entire prior 5-wave sequence. So that means here. So we go back to this high, right mouse click DP, and can you see how at this particular point in time the market hadn't reached this higher time frame DP level. The day before was President's Day, so it was actually a very narrow range trading day, so not a lot going on. But the point being is, as we came into this low yesterday, it was a wave 4, and also, more importantly, it hadn't reached the higher time frame resistance. Therefore, the large trend was up. I'll just take that off because that's an awfully big DP. Let's go down to the shorter time frame. Right. So this will be a good trade to take because it's in the direction of the large trend. But if I zoom in, can you see how we had a history triangle on this bar here, the bar before the setup? Now this is what I want to go in and have a look using our training mode to show you that just because there's a history triangle does not mean it's a losing trade. So let's use our training mode and jump back to say here. If we now step forward, one bar, we go down. Here's our first trade setup on this bar. We place the analysis on. There's our entry level, our stop level. We go forward another bar. Can you see how you'd have been taken in, but you wouldn't have been stopped out because it was a double bottom? Now I'm not sure whether the market went down, then went up, took you in, or went up, took you in, then went down. But either way, can you see how it's a double bottom? You weren't actually taken out on a potential long trade, but you were taken in. So in other words, there was a history triangle here, and then a DP buy on the bar afterwards, but there was only one trade set up. Let's turn training mode off. Let's have a look at the analysis. Market goes up to the first target. Very nice indeed for a potential 3.6R profit. Remember, we use correct position sizing to keep our initial risk small under control. In this case, less than 2% on a sample $20,000 account. So that was a good trade setup there. But I want to look at that with some other eyes. What do I mean about that? Well, if I clear this off, and I'll use our training mode again to jump back to here. What I want to look at is the volume. Let's make a bit of space here. Let's put our DP support on from the previous low to show you that these levels are on the chart in advance. That's why we like them, because they're leading indicators. They're preparing for a support zone before the market even gets there. Let's go forward one bar. Whoa, lo and behold, we have a very wide range bar. It gives us a high volume indication on our VS, which is a volume spike setting. But the more important thing is that this bar here has gone below an important psychological level. So we only look at these high volume bars on our volume chart here when the actual price bar goes beyond an important psychological level. You can see that. There's the previous low of the day. It then broke that. Therefore, most amateur traders will be going short. Let's move to the next bar. The next bar gave us a blue buy bar. In other words, the market was not carrying on going down. In other words, the volume on the previous bar was not selling, i.e. not continuing to go in the original direction. It was actually buying because the market failed to follow through. And more importantly, it failed to follow through at our DP support zone. This is the important thing. We don't just want a failure at a level, we want that failure to unfold at our support level. This is the level that professionals will tend to make the reversal at. So what does that mean? Well, that means professionals are coming in here and buying. So therefore we know that if we take a long trade setup, we're now in the direction of the professional money. This is the direction the professionals are going to move it. So this then comes to the area of trade management. Normally what we do is when the market gets to the first target, which it did here, we'd look to our STF, this time the strength, to see whether what we call the market is strong, in other words beyond the strength band. In this case it wasn't, so normally you'd come out of the first target. However, knowing that the professionals were coming in here and knowing that they were likely to go long, there was an argument to want to manage this trade by letting it run further. Where would the next logical resistance area be? Well, as normal, we go out to a higher time frame chart. Let's zoom in a bit. Let's just clear all this off. So we go back to the previous pivot high, which was here. Right mouse click DP. Remember, these are on your chart in advance, so that would give you an area of potential resistance on the higher time frame. Let's go back to the 3-minute chart. So in other words, this would be an area of where you think the market is likely to make a reversal. Now this was very interesting. I'll look at this in a second, because this was also a wide range bar on a VS setup that went beyond the previous pivot high there and then reversed. But can you see the important point is that this didn't reverse at our resistance level. It was actually a tick short. So technically the market here had not reached the area where resistance was anticipated. So in other words, technically this would not be a MTPredictor VS reversal and the market was not likely to go down. So let's see what happened. Well, the market actually reached this DP level here. So let's take the market up, our order up to there. And you can see that the profit increased to a nearer 6R, 5.9R. At this level, the STF was definitely strong. Therefore, you could decide to either come out at the DP level or trail with the ATR stop. And as you can see, the result would have been the same. So that was a very good example of catching that trade there, which, as you can see, caught the very bar of the low of the day. People say you can't buy or sell highs and lows of the day. Well, here we are, showing that yet again MTPredictor has managed to not only anticipate the support level where the low came in advance, but also given us a trade setup backed by professional buying. So we knew it was a good trade setup to take. They caught the very low of the day and had a very strong move. Let's play devil's advocate and say perhaps you did want to reverse at this particular level. If you had have done, you'd have locked in a 4.8R profit. Then if you had have gone short here, you'd have then had a -1R loss. Let me just put that on, -1R, a -1R loss. So the loss would have been kept small, profit would be large. But interesting enough, as the market came down here, if I right mouse click here, do Elliott wave minor, can you see how the decline only unfolded as an ABC? That's a corrective pattern. And in fact, actually, if you go down to the 2-minute chart, there's the decline. The decline actually goes into a TS3 buy setup, which indicates another potential leg up. So if you had decided that was close enough and taken the short, the loss would have been small and the profit would have been large. But technically, the best way to have traded this would have been to keep the long trade going up into when it had actually reached the first target, not close, but had reached the first target for a potential 6R profit or 5.9R. So as you can see, a very good day on the ES yesterday, where we nailed basically the low of the day with a beautiful long trade. The NQ wasn't quite the same because the NQ came down here, but it went a bit beyond this level. In fact, if we look at the Elliott waves coming down here, you can see this was actually an ABC correction coming in at the typical wave CWPT. So another indication that the low was coming in there before the market moved higher. Let's look at the YM. The YM was exactly the same, a VS setup. There's your bar that went below the previous low, came into exactly the same as the ES, a double bottom where you would have actually looked to go long on the first trade setup. Market came into the first level there where potential 4.5R profit was available. If we'd gone back to the higher time frame, just as we did in the ES, there's the previous bar high or the previous pivot high. There's our 15-minute resistance level. Let's go down to the 3-minute chart. Running that up into the higher time frame resistance would have meant a 9.7 or almost a 10R profit. Look at that, absolutely amazing. Where here you would have been long from the very bar of the low of the day and taking profit at pretty much the high of the day. You could not have got a better trade yesterday on the YM, so absolutely astounding. After that, then you had a DP sell. That DP sell was in 15-minute resistance, therefore this was a good one to take as well. Do the analysis on that. Down into the first target, 2.4-hour profit to add to it as well. Would you be looking to take this long trade here? No, because there's your 15-minute resistance. Largely trend was down. So out of the 3 USE minis yesterday, the Russell Index didn't do a lot either. It rallied up and had some buy setups on the way up. But the main one, or the best one of the day, was the YM, where had a lovely 2.4-hour profit. That 15-minute resistance caught the very high of the day, and we had this DP buy backed by our volume VS spike that nailed the very low of the day. If you'd managed it this way and let it run right up into the half frame target, you can't get day trades any better than that. I mean, just that is an absolutely astounding trade. So the result, a potential 9.7-hour profit. Or if you've been trading the ES, as we've seen, it would be a lovely 6-hour profit as well. So either day, either way, MT Predictor had a very good day on the USE minis, catching some very nice trades for you.